You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from this little thing we like to call the Options Insider Radio Network, a legion of shows for you guys to choose from in addition to this here, the Option Block program. And, of course, you can find them all wherever you find your favorite podcast, iTunes, Stitcher, AHA Mobile, TuneIn, our website, many of our partners' websites, and, indeed, our mobile app available for iOS, Android, and the burgeoning Fire OS. You can instantly stream all 300-plus episodes of the Option Block and all the other shows on our fine network. And, of course, if you want to save a few for offline listening, maybe while you're working out or commuting, well, then hit that download button. You can do it right in the app and download them right there. And, of course, while you're in the app, you can shoot us a Facebook question, a Twitter question, an email, even leave us a voicemail. No shortage of ways for you guys to get in touch with us here at the old show through that app. So check it out, the Options Insider Radio Network mobile app, available for iOS, Android, and the Fire OS. All right, and joining me on the old all-star panel today, starting off with the man from the proverbial mountains, none other than Uncle Mike Tusaw from RCM Asset Management. Uncle Mike, welcome back to the show, sir.
Happy to be here on a beautiful fall afternoon in Chicago.
So yeah,
oh wait, it's summer.
Yeah, exactly. So your quarter is pretty much done, right? You can pretty much check out again until the Q3 numbers.
Yeah, I can take a nap.
You're done.
Not really.
All right, and also joining us from the land known as Options Express by Charles Schwab, the man of many hats, a.k.a. the Viceroy, Mr. Alex Jacobson from OX by Charles Schwab. Mr. Viceroy, welcome back to the show, sir.
Good to be here today, and it is the wife's birthday, and I would get in trouble if I didn't mention that. So happy birthday, Debbie, and good to be here today.
Are you saying you make your wife listen to this program?
Only when she's bad.
I was going to say that might be grounds for divorce in and of itself there, sir. All right. And joining us last but not least from the Option Pit World headquarters, nay global, nay international, nay interstellar headquarters there in scenic and sunny downtown Chicago, unless he's in Riverside. I don't know, listeners. Mr. Mark Sebastian from OptionPit.com. Mark, welcome back to the show, sir.
Hey, thanks for having me. Yes, I am at our galactic headquarters. It's nice of you to remember the Kuzbanians that also subscribe to Option Pit.
I was going to say, the outpost on Jupiter, I understand, is coming along very nicely.
Yes, it's very important. So, yeah, good to be here. Good to be breathing. And how about this weather? It feels like a fall day, doesn't it?
If I ever got outside the studio today, I might be able to agree with you, but I've been lock, stock in here. So the weather in our building, though, quite lovely. All right. With the gang all assembled, we're going to dive right on into it. It's time for the Trading Block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is, of course, a portion of the show where we break down what's moving, what's catching our eye, what's lighting up the old tape in today's market activity. For those of you playing the home game, we are recording this on Thursday, July 24th. You'll be hearing it on the morning of Friday, July 25th, if you're tuning in right away. If not, all of you out there in podcast land, enjoy it whenever you're listening to this fine program. And in today's activity, not a whole heck of a lot from a broad sense. We didn't see a lot of big movement. Most of the major indices closing fractionally unched up a little bit, down a little bit, no big deal. S&P, Qs, and Dows all essentially unched on the day. VIX cash ticking up a wee bit, about a third of a handle to 11.86 on the day. But there is some action in the old after hours. We'll be keeping an eye on Amazon. They are reporting after the bell, so we'll keep an eye on them. I know, Alex, you were saying on our last episode that the OX clients were just flocking into Amazon. In particular, some pretty out there stuff, quite literally, actually. Very, very far off, very out of the money upside calls. Is that still the case? Was Amazon lighting up the tape today over there at OX? And A, and then B, were they still piling into crazy stuff like Jan 500s?
I walked down to 10 about 15 minutes before the show started and asked Regas that question. And he said, yeah, it's still happening, that our clientele was clearly making some very aggressive trades in expectation of Amazon, of many of the momentum stocks. Amazon, although it's had a good run, it's had about a $70 run off the low. It's still down about 10% from its highs. So not only are there a lot of option positions, but there's a lot of that stock sitting in OX accounts. So, yeah, it was still a favorite today. A lot of Facebook today, too, even though there was a lot going into earnings. I think the earnings surprise created a lot of capital for folks to start rolling and moving stuff around. So, the whole social media area, LinkedIn, Twitter, and Facebook were active today, and a couple other names, a couple perennial favorites were active today. Both Baidu and F5 were seeing activity with our clientele today.
Someone bought a 50 lot of the 4 double weekly, so should I really say daily, calls out there in Amazon today, too. I'm going to go out on a limb and say that was an OX client, just for the sake of the show. But, yeah, people still clearly strongly optimistic here going into earnings on Amazon. They went out today, 358.5 roughly, listeners, up about 50 cents or so on the day. And we're waiting for the earnings to come out after the fact. The at-the-money straddle, they're going out about 18 at 23 or so. So expecting a little bit of action out there. Mr. Sebastian, was this a topic du jour today in the old pit chat?
Amazon had some crazy volume and some weird stuff. If you look at kind of upside, there were people buying, expiring tomorrow, the 440 calls, the 435s, the 430s.
Yeah, I'm looking at those. The nearly 400 of the 440s, almost 600 of the 435s.
Look at the open interest on the 440s expiring tomorrow. 365 trade a day. Open interest at 2,400. I mean, just nuts. And, so there is some serious expectation of real upside in this name, which is, who knows. But, the one thing I would say about earnings season so far this year is it has been a bit of a dud. Many of the big names, the straddles have come in at, lower than traditionally we might expect. The Amazons, the Microsofts, or not the Amazon, the Microsofts, the Apples, the Facebooks. And then they've all opened up kind of unchanged or up a little bit, but not crazy, and none of them have really outmoved their straddle.
Yeah, I'm looking here, speaking of straddles, I'm looking here at some of the surrounding strikes, seeing what might be reasonable sales for the outer extremities of an iron condor, maybe going into this, something that could reasonably try to explain away with some rational behavior.
Well, they were buying those calls.
Yeah, but I mean, like, almost 6,000 of the 400s, that's well outside of the iron condor range.
No one was selling that junk. They were all bought.
It's amazing. 2,000 of the 415s. And again, listeners, these aren't AUG, these aren't SEP, these are July weeklies expiring tomorrow. So these are almost the definition at this point of lottery tickets out here. So crazy stuff. And Alice, like you said, this has been going on all week. This isn't a new phenomenon. People were just, this is kind of like the old school Apple we used to see going into Apple, just buying upside all day long. Apparently Amazon stealing some of that thunder this week.
Yeah, it looks like after the Apple, disappointment in terms of the people who bought premium going into earnings, Amazon looks like where that spec dollar has gone, and we should know in the next 10 or 15 minutes. But if you look at the activity, it was clearly biased to the extremes. It was clearly biased away from the 355, 360 area. So it's going to be an interesting one to watch. It's going to be an interesting opening tomorrow.
Speaking of those quote-unquote disappointing earnings, we did have Apple report earlier this week. Once again, lighting up the tape, reporting better numbers in pretty much every category across the board, yet disappointing in a few key categories. Even then, I use that term loosely because they were relatively mild disappointments, but still anything disappointing in Apple really just tends to have the street just take it to them. Stock not moving up after earnings, but certainly not as aggressively as a lot of the aggressive premium buyers perhaps might have hoped. It looks like premium sellers definitely winning the day on that trade coming out of earnings. Uncle Mike Tusaw, what's your take here on this action post earnings, and have you done anything to update perhaps that position, long stock, long put, or are you still pretty much flying high with those two?
Still flying high with those two for the time being, and it got a little bit of movement. I mean, it at least went up. I mean, I think with what's going to be happening in the fall with perhaps a new iPhone and the new products that may or may not be coming out, I think that's when Apple, if it's going to have a run, that it's going to have a run. The other thing that is staring Apple in the face right now that a lot of technicians out there would agree with is the 100 level. We got to break through that level before we can get any sustained upside movement. I think that's a big mental barrier for a couple of reasons. Number one, it is 100. And reason number two, it is where the all-time high is on a split-adjusted basis. So I think if we can sneak through the 100 mark, I could see a run-up going into this fall for a lot of reasons.
And I know you don't trade it a lot, but I'd imagine some of your clients might be interested in that other A name we were just talking about, Amazon. Any activity from any of your clients out there, any interest out there in Amazon, or are they just pretty much playing watch and see like you?
Pretty much watch and see along those lines. It's there is no other A name besides Apple, Mark. It doesn't exist.
Such a zealot you are. Well, an F name I know you do watch is Ford. It had a bit of a sell-off over the past few months. It has since rallied back to some appreciable levels. Been some news out there, been some vol. They've had changeovers at the top level over there. So it's been an interesting name to trade of late. Have you gotten back into Ford at all? I know you were out writing out some puts in the past. I know you had some clients who were kind of active out there. Are you back in Ford at all, or are you still just watching from the sidelines there?
Still watching from the sidelines. I'd like to see it get down below 15 again before I really got into it. It was a tempting thing back in more than a few months back, earlier in the year when it was below 15. I wanted to stable out more, but I missed the upside on that one. C'est la vie, but didn't feel comfortable getting into it at that point where it was after the drop with which it had to get to that level.
Yeah, it's not volatile enough where it really is worth your time or effort to try to go out there and write some premium on the 15 strike, because you're not getting a lot of bang for your buck out here, at least unless you go very far out. I know that's not your style. Uncle Mike.
It is not, but I try to keep my broker happy, so who knows, maybe we'll sell some 15 puts if need be, right?
There you go. Get in the game a little bit. Have some fun. Well, you got to do something to juice that BBI until the next Apple announcement, right?
That's true. Yeah, I have to say, today was a very boring day in my world.
Well, it wasn't a boring week, thankfully, from an options perspective. Alex mentioned Facebook earlier this week, and they, of course, surprised a lot of people and took off to the upside. Facebook closing today, a little bit post-earnings now, up about nearly 4 handles, 370, to close right here under $75. And they've just been lighting up the tape from a volume perspective of late, putting up over 1 million contracts the other day. So just crazy numbers. You're talking, VIX and Apple in their heyday type numbers out here in Facebook. And today, putting up still a very respectable, over 1 million contracts again today, 1.1 million out there in Facebook again today. So just insanity from a pure options perspective out there. Mark, is this one, I'd imagine, caught the eye of some of your pit chatters today?
Oh, for sure. For sure. Yeah, one thing that I've learned my lesson on this earnings season is, we spent a lot of. We're going to talk about odd flow in the odd block. Flow into and out of earnings is far much less predictable than regular flow, and this is Facebook was another one where the flow really didn't say much and it ended up popping, but we've seen Qualcomm. Everybody was buying calls, and the stock got absolutely plastered this morning. So, I don't know. Just kind of, we've definitely been paying attention to a lot of that stuff.
It looks like Amazon may have announced, because the stock taking it a little bit on the chin, actually, in the initial blush here, down about 10 handles or so in the after hours, right around 348 right now. So, again, all that out-of-the-money call paper. Unless this has happened before, listeners. It could change on a dime. I've seen this happen quite a few times. So the first blush, not always the correct one. The street needs a little bit of time to digest the number, and it seems like it's already coming back off those lows a little bit. But still, first blush, not exactly positive for all those crazy, and I do mean crazy, far out-of-the-money daily call buyers at this point. We'll keep an eye on it. We'll watch it throughout the rest of the show here, listeners. But so far, not looking good for all those people way north of the 400 strike. All right, let's keep on rolling right on into our next segment. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, welcome to the Odd Block. This is, of course, the portion of the show we break down the weird, the woolly, the wild activity lighting up the old tape today. And I know when I think of weird and wild activity, listeners, I think of Midwestern utilities. In particular, Wisconsin Energy Corp, ticker symbol WEC. That's where we're kicking off the old Odd Block today. Closing today, $45.59. Essentially unched on the day today. This is the name that, in keeping with our grand odd block tradition, does essentially no option volume, about 300 contracts a day, doing a little over 10x that, doing about 3,500 contracts today, and pretty much all of that coming in, surprise, some call buyers and some fairly far out, if not far out of the money, call buyers. In particular, the activity we noticed was on the Jan 50 strike. When we profiled it on the site this morning, we profiled 2,624 of the Jan 50 calls going up for 30 cents, went up in one big block. There was a resting offer out there, and some paper came in and kept taking chunks of it until that offer was gobbled up, and then they added up about 1,000 or so more to boot about 800 or so for a total, like I said, of 34.36. Interestingly enough, this is exactly 2x the amount of open paper on that strike, and this is not a lot of strikes out here, listeners, with a lot of open interest, except for this Jan 50 strike and the OC 50s as well, with about 3,300 open. Everything else pretty paltry by comparison. Mr. Sebastian, what's your take here on this flurry of call buy-in in this Wisconsin Energy Corp?
We've seen a consistent buying of that type of upside utilities. I don't know what the deal is, but, I've probably seen over the last couple of weeks a lot of, I can't even count the number of times I've seen people buying upside calls in utilities. It's been a relatively consistent theme, believe it or not.
And the weird part is buying. If you expect any call activity in utilities, it's overriding. That's what people do all day out there.
It's been all upside buying in utilities. It's really weird. I feel like there's a huge consolidation coming.
Well, you know what? There's been M&A in utilities lately, which we haven't seen for years. So that's got to be driving some of the spec upside call buying.
For sure. Absolutely. I think that's a big piece of it. And then, I don't know where the rest of it's coming from, but, we're seeing these guys just buy stuff left and right. And, none of it's really panned out yet, but at some point these guys will be right.
Well, all the people trading covered calls out there are happy because they're getting a little bit more juice for their trades these days with all these call buyers coming in and bidding up calls left, right, and center. We'll have to keep an eye. Maybe we'll make a category for our odd block archives, and we'll entitle it Upside Call Activity in Utilities, and we'll keep an eye on those collectively. All right, moving on to our next name. This is the iShares Dow Jones U.S. Home Construction ETF, ticker symbol ITB. Closing today, $23.38. This is the name that does fairly decent numbers for an odd block candidate, about 4,700 contracts blown the doors off that today to the tune of 52,000 contracts. And what we saw here was essentially a pretty sizable roll. Doesn't look like it was up. It was pretty much just straight out. It was the July SEP 23 call spread that went up, which turned out to be a roll. We saw 18,000 of the July weekly 23 calls going up, and then we saw the same number, 18,000 of the SEP 23 calls going up as well, against open interest of, surprise, surprise, 18,000 on the July weeklies and essentially 11 on the SEP 23 calls. Paper was selling July, buying SEP. So again, the closing out that nearer term position, rolling it on out to the same strike in September, giving them a little bit more time here to perhaps spec on a pop in U.S. home construction. When we profiled it, we did 9,000 on the site. A second block went up with the exact same number, giving us a total of 18,000 contracts here. Pretty sizable one, Mr. Sebastian. What's your take here on this roll in ITB?
Well, ITB is an interesting one. Probably somebody that had an existing position, didn't really want to change their position too much, but felt like they needed to change the time and duration. And that's exactly what that is. And, makes sense. When you hit a trade and you don't want to take it off yet, but you're coming near expiration, guess what you have to do? Roll it. And that's exactly what this was.
Yeah, it doesn't really betray any change in their fundamental opinion here. It's same strike, same everything else. They just ran out of time on the first leg, and so they thought, hey, let's give us a little bit more time. That expiration date being a key complicating factor for a lot of options traders out there. This guy keeping his 23 strike, just rolling on out a little bit. But again, sizable nonetheless, worthy of note. All right, rolling on, pun intended, into our next victim here on the old odd block. This is Navios Maritime Holdings Inc., ticker symbol NM, closing today $8.43, essentially unched on the day. This is the name that does about 500 contracts a day, so not bad paper from an odd block perspective. Doing nearly 10x that, about 5,000 or so contracts today in good old NM. And once again, surprise, surprise, call activity, in particular, out-of-the-money call activity in December. When we profiled it on the site this morning, we profiled 643 of the DC-10 calls going up for 50 cents. That went up in one block, but then we saw more coming in on the heels of that to the tune of a total of 3,265 on the day on open interest of just a hair over 100 contracts. So all open in paper. We also did see 1,000 of the D7 halves going up today, again, on essentially zero open interest as well. And we saw some of these calls offered again coming out at 45 cents. They went up for 50, offered in this guy's face for 45 cents. Never a good sign for a call buyer. Looks like someone perhaps trying to take advantage of this and saying, hey, I got more here if you want some of these. This kind of goes back to the narrative we were talking about earlier, Mark, with the utilities. People usually are overriding out there, people gobbling up calls. Someone gobbling up some calls, some upside calls here as well. And a call writer saying, hey, I got more coming at you if you want. What's your take here on all this upside flurry in Navios Maritime Holdings?
This is not one that I pay attention to too closely, believe it or not. This is odd even for this odd block. But, there's nothing better than being involved in maritime holdings. It's far better than land time holdings, in my opinion.
Yes, nothing could possibly be better than maritime holdings. But yeah, you, as an options trader, you can surely empathize with this guy who essentially gobbled up a ton of upside, and maybe not that so much, but now having them offered in his face, never a good feeling coming out after that. All right, and wrapping up the old odd block here, we have a newcomer. This is WhiteWave Foods Company, ticker symbol WWAV, closing today $32.26, a banner day for WWAV, up about 4% or $1.25 on the day. So the name that does about 1,000 contracts a day, so pretty substantial, and doing 14,000 contracts today. So a sizable day in WhiteWave, and what we saw in particular was, again, calls. Surprise, surprise. Upside calls in particular, but a little bit farther out than you might expect, listeners. We saw the Jan 35s going up en masse to the tune of, when we profiled it, 8,000 of them going up for $1.45, and by the end of the day, a total just a hair shy of 10,000 went up total, so just another 2,000 afterwards. A ton of paper on only 445 contracts open. They went up close to the offer, so that's interesting in and of itself. This guy having to work to get this done, paying up a little bit to get this position. We also saw some traders moving in a little bit nearer term, a little bit closer to home as well on the AUG 32 halves, picking up about 2,000 of those on open interest of 554 contracts. So pretty much come get your premium, come get your upside here in WhiteWave today. A lot of this probably driven by the relatively substantial upside move in the stock. Is that your take as well, Senior Greasy Meatball?
Indeed. That is exactly what happened.
I can always count on you for your pithy insights, sir.
There you go. Well, sometimes a spade's a spade, you know?
That's why the odd block exists, so we can craft a spade and turn it into whatever we want it to be here.
Yes.
On the old program. We use our words.
And in this case, another spade.
Yes, unfortunately, that is the case. All right, listeners, that is going to do it for the old odd block. And now we're going to keep on rolling. It's time for Alex to put on his fanciest of fancy hats, because it's time for the Xpress Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit OptionsExpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, listeners, it's time for the Viceroy to take us deep behind the scenes, beyond the velvet rope, into the land, the stronghold, the inner sanctum of Options Express by Charles Schwab. Mr. Viceroy, in addition to all of this upside love in Amazon, what else was going on in the land of Options Express by Charles Schwab today?
Well, a couple names I'll talk about. Then I'm going to showcase a tool relating both to the Idea Hub and the site in general. But as we've all said, the overall market was relatively quiet today. Social networking was hot, and a handful of names, Amazon, Intuitive Surgical, Facebook, or as we refer to it here at OX, the new Lululemon, were all lighting up the tape. But because the overall market was quiet, I like to use these opportunities to showcase some of the tools here. And one of the questions we get a lot, and one of the questions the desk gets a lot, is how do I identify all this unusual activity that's talked about on the show, that you put up on the Insider site, and that the gurus on CNBC and Bloomberg and Fox Business News talk about. And I want to showcase a product we have here at Options Express, and it's called the Dragon. And I know as soon as I tell you it's called the Dragon, somebody's going to say, how did it get that name? And I will give you the quick, succinct answer that I have no idea. But what the Dragon does is it's an unusual activity finder, and it allows customers who come to the site. Dragon is in the toolbox, top of the page at Options Express is the toolbar. The Dragon allows you to screen for unusual activity, and it does it in about 16 or 17 areas. So you can look at stocks that had a spike in volume, options that had a spike spike in implied volatility. Options that had a big change in open interest. And Grigas and I were talking about this earlier today. A week ago, if you were in the Dragon, you would have seen a big spike in open interest in a company called Puma Pharmaceutical. Now, I know as soon as I say that, somebody's going to say, yeah, but there's lots of those, and how do I separate out the good ones from the bad ones? I agree it's not always easy, but the great thing about tools like the Dragon is if you're looking for a trading idea and you want to base it on, as I say, a spike in stock volume, spike in open interest, or even if you're looking for a trading idea, but you want to get a sense of what's going on in the market, lots of the people who use tools like the Dragon and use tools like the Idea Hub will use them for price discovery. Now, what does that mean? It means they'll use them as their weather report. They'll get a sense of what the money flows have been in and out of the options market. Yeah, most of the volume most days is Apple, Bank America, the Spider, the VIX. But there are a lot of days that all of a sudden there'll be another name crop up there, and you'll see a symbol in the 10 or 20 most active that you're not familiar with. And it's the great start of researching a trade and saying what's going on here. Is there M&A activity here? Are there earnings? Is there a dividend? Obviously, we've talked a lot about dividend trades, and sometimes something will become active because of a dividend trade. Generally, that's pretty easy to understand. And I'm not going to say dismiss, but maybe go on and look for another trade. So OX customers, next time you're on the site, come to the toolbox, click on it, come down, look at the Dragon, look at the drop downs, and get a sense of the kind of information that you have available to you.
Yeah, surprisingly enough, for all the unusual activity we talk about here on this show, I don't think we've ever really talked about the Dragon before, which is doubly surprising given the fact that tool has been around for quite some time. In fact, it's probably one of the earliest unusual activity profiling, scanning tools I can think of out there, certainly available from a major brokerage house, and yet it doesn't really get, I know Idea Hub gets all the love, that's your baby, it's a great tool, but the Dragon is one of the precursors, the predecessors in this space, and it doesn't really get the love I think it needs. So check it out, listeners. It's a pretty cool tool. If you like what we talk about here on the Odd Block every day, well then you should be using the Dragon pretty much every day. It's free. Go check it out and see if you can find some of these names we're going to talk about on an upcoming show, perhaps before they happen. Good stuff. Thank you for that, Mr. Viceroy. All right, now it's time for us to keep on rolling right on into your segment, listeners. It's time to open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, Alex, put your listening ears on, because as I expected, we have a lot of feedback from our great discussion debate last week on open interest. It was an eye-opening conversation, I think, for a lot of you. We got quite a few emails on it. I got a few here that are kind of similar, so I think I'll lump them both together. And then since one of them mentions you here, Alex, I'll probably let you take first crack at them. First question comes in here from a listener who goes by the handle Sea Biscuit, and he writes, how do the market makers figure into open interest? Don't they essentially double all of the OI because they are taking the other sides of every trade? Should I divide all open interest numbers by 2 to get the real activity, or is that already done for me? Interesting question there, Mr. Sea Biscuit. And then that is followed on the heels here by a question from Avon Man. He writes, just to clarify on the conversation from last week, Alex said open interest was broken down from each exchange and then netted with market maker activity. So if customer A buys 10 calls on Arca and then customer B sells 10 of those same calls on Arca, both opening, that would be net 0 open interest because they're on the same exchange. But if customer B sells those same calls on a different exchange, let's say NASDAQ, then it would be net 20 calls open on the strike because it's 2 different exchanges. Is that right? Well, interesting question there, Mr. Avon Man and Mr. Sea Biscuit. Well done. Alex, since they invoke you, I'll give you first crack at these. What's your take here for our friends Avon Man and Sea Biscuit?
Okay, so first of all, this is my second favorite topic after
I could never tell.
After Rick and Al. Yeah. And let me go through this again because there's clearly some confusion. But let me also preface this by saying nobody understands open interest, okay? Open interest is gross customer net market maker. Gross customer net market maker. So let's talk about what that means. That means if customer A buys 10 to open on exchange A and customer B sells 10 to open on exchange B, open interest is 20. It's not 10. And the reason it's 20 is because if one of those customers closes and the other customer doesn't, there's still 10 open interest. Now, OCC nets market maker. So what does that mean? It means OCC at night, and open interest is only calculated once a day. And by the way, every exchange reports the same open interest. So when you go look at the quote line, although I suspect most people today just look at chains on their brokerage website. But in the old days, if you actually looked at an exchange quote, you would see that every exchange reports the same open interest. So the question is, should I cut it in half because market makers are half of it? The answer is no. Market makers have already been netted. So if that first customer who bought 10 traded with a market maker who had no open interest, the creation is 10. They net the market maker out. Is this confusing? Yes. Yes, it's absolutely confusing. Can a market maker create open interest? The answer is you don't know until the end of the day. Because if market maker A trades with market maker B and neither one of them have open interest, then yes, open interest has been created. If market maker A trades with market maker B and market maker B had open interest, they just move the open interest. It is confusing as hell, and let me confuse it more for you now. In the futures industry, it's calculated differently. So gross customer, net market maker, if you're using it as some fine-honed technical indicator, be very cautious because it often doesn't mean what you expect it means, and nothing any of us say will end the controversy.
It's been raging for as long as this indicator has been bandied about. I think that's the key takeaway there, Alex, is that people who try to really hone in on open interest as some sort of real-time, very, very insightful, accurate indicator, it simply isn't that. At best, it's a lagging indicator. It's one day behind, and you have all this other confusing minutia that is thrown into that number. Where there is a use case for it, as we just showed you in the option block, is when you're trying to perhaps gain a little bit more insight into the intent of a customer or a trader, and then when we're breaking down trades, we're looking at spreads, you can see when there's a position going up with X amount of volume and it's the exact amount as the open interest, you can kind of make some reasonable intuitions from that. So it has its uses in those scenarios, and also, as we discussed on the show last week, around periods of expiration where we can see underlying tending to gravitate towards strikes like that. It can be a little bit overdone in the media sometimes to talk about that, but it is a tool that you could use and to help predict some very, very near-term underlying fluctuations right around expiration. But once you get much beyond that, I think open interest tends to fall down. Mark, Mike, anything you want to add on this great and ongoing open interest kerfuffle?
Yeah.
If there's not enough of it, don't trade it.
Yeah, and the funny part is, open interest is kind of worthless. Funny part is then stock exchanges all do it differently. And in fact, listed stocks trade open interest different than NASDAQ stocks. And, it's all about who's trying to goose volume, who's trying to goose this, it is recalculous how this stuff is calculated. And the only real value of open interest to me is if I'm trying to figure out whether the guy is opening or closing. That is really the only way I use it. I've never heard of somebody developing a successful technical indicator based on open interest. All the ones I've heard of were mostly baloney.
Yeah, I mean that's pretty much the case. The only real use case, like I said, is for sentiment. And then everything else, all the other salient details that you could maybe discern from open interest are going to be clearly and readily apparent in the spread. I mean, if there's not much open interest, guess what? You're probably going to have a wider spread on that strike. And if there's a lot of open interest indicating a lot of volume's been going up for quite a while, then chances are you might have a tighter spread. Again, open interest and volume, not the same thing, but it's a good indicator, all other things being equal, that maybe you can find where some activity has occurred in the past. So interesting, useful, though perhaps not as useful as some people might think, and certainly a hell of a lot more confusing than I think a lot of people really gave it credit for. All right, next up, let's dive into the trading end of the space, away from the archaic minutia market structure side of the space for a second. I think we can all use a break from that. We talked earlier about Facebook. We have, as no surprise, a question here about Facebook. This comes in from maybe a friend of yours, Alex. This is Alex C, though, and he writes, Facebook looking strong post-earnings. What options trades do you guys like out there right now, if any? Thanks for the shows. Just checked out the advisor's option for the first time as well. Very timely, as I'm in the process of picking an advisor. Well, just to give a free plug over here, listener, Mr. Alex C., if you are looking for an advisor, we do happen to have one on the show who's somewhat familiar with options, so you may want to give Uncle Mike a call. I hear through the grapevine that he is accepting new clients on a variety of different scales, so maybe you fit in there. If you're listening to the advisor's option, you're probably looking for an advisor who uses options, and I can tell you, I've been looking around the country for more of them for that show, and there aren't many. So Uncle Mike being on this show may just be a good fit for you. As for the other stuff, as for Facebook, it's a pretty timely name, pretty active right now. I mentioned how much paper was going on up there. Literally 1.12 million contracts lighting it up out there today. Just incredible volume, incredible numbers. I'm looking here at some of the strikes and names as we're getting ready for the show, and it's literally paper on just about every relevant strike and just about every relevant month that you can think of. It's just an incredible sea of volume. So literally whatever you can put on out here, or whatever you want to put on, there's a deep, pretty liquid, fairly substantial activity going on out there, at least today. Like you said, Mark, you said Facebook was a big topic of discussion in your pit chat today. Surprise, surprise, today's a big day for Facebook. Did anything emerge from those conversations as perhaps a rallying cry for the pit mentees to say, hey, I like this vertical, or I like this maybe time spread? Anything catching their eye out there?
In Facebook itself, we were looking at it, and I think we're all kind of thinking about waiting a day. Speaking of Facebook, by the way, you see Amazon's down 21 right now, actually. And that was one that we were watching, and we were talking about all this open interest. One of the things we were discussing is whether all this upside open interest was just shorts protecting themselves, and whether part of the reason why all this upside open interest is so high is because they were buying a bunch of ratios to sell kind of meteor juice into this announcement. And there's a strong possibility that was the case. So, yeah, Facebook is one where, I've been kind of wheel trading this one on the street for some time, where basically I've been selling puts once to twice a week in this thing and have not been assigned in a very, very long time. Going into Monday, I may actually hold off for a day or two just because, do I think that Facebook is a $55 stock? No. Am I sure it's a $75 stock? Maybe. We'll see.
Yeah, I think that's pretty sage advice. Given this run-up we've seen now and all this activity, maybe diving into this maelstrom at this point, sight unseen, not the best idea. Certainly writing puts out there has been a decent way to go over the past few months out there. And yeah, you're right. Checking in on Amazon, just getting pounded in the after hours. I'm going to be charitable, and I'm going to hope. I'm going to hope that all of that upside we saw out there, like the 400s and the 4 doubles and the 415s and all these things that are, some of them almost 100 handles out of the money at this point, were indeed some sort of perhaps short hedges or perhaps some other way to get your teeth into selling some meteor premium. I'm going to hope that, because otherwise, if it's just as it shows on the surface, these are going to be pretty painful trades coming tomorrow if they aren't indeed already. Alex, Uncle Mike, I know you guys don't play in Facebook too much. Anything really catching your eye out there you want to share with our listeners in social media, Facebook land?
Well, for Facebook, I don't think I would want to get into it now either, just especially with a gap up after earnings. But if you do just have that yearning to play in Facebook and you have to get in there, I think just doing just an old-fashioned bull call spread. That's why options were invented. You can take a limited risk. And if you don't feel comfortable buying more than what just buying upside calls on it, by all means, do a spread. that's what you want to check out for buying it, and you just have to get into it.
Yeah, he doesn't say which way he's leaning, but if he is indeed bullish, then I think we all can get behind using a spread to mitigate some of that outlay. Mr. Viceroy, what's your take here on the land of FB?
So I totally agree with Mike. I think Facebook now is the momentum stock in the market now. It in some ways has replaced Apple as the momentum stock. And I think Mark said something that people really need to understand. I know he glossed over it, but many times people buying upside calls are not betting on the upside. By the way, this is why the other commonly used statistic in the options market is so worthless, which is the put-call ratio. But lots of people could be buying calls because they're hedging some kind of short position. And I know I quote the SEC study all the time, and everybody then sends me emails that says, you don't know what you're talking about. But the SEC study, when they looked at qualified contingent cross, looked at trades of 1,000 contracts or more, and found that most of them, the vast majority of them, were not what they appeared to be. They were either hedges, they were delta neutral vol plays, or they were something other than a call buyer buying a call because they were bullish, or a put buyer buying a put because they were bearish. And Mark's comment about the fact that this may have been hedging short should be taken to heart, because every time something like that gets said, I get literally dozens of emails that say, okay, bozo, explain to me how a call buy can be a bearish trade. And keep in mind, it might be a call buy versus short stock. That's a synthetic put. That's a bearish trade.
You know, it certainly does seem like something is afoot out there in Amazon, because we've been watching that for a lot of quarters going into earnings, and I certainly can't remember another time in recent memory where there was this much unidirectional, appearing on the surface at least, out of the money activity like this. I mean, we certainly see a lot of crazy activity going into earnings. Amazon, a big name. Amazon, very retail friendly. Retail tends to flock into upside ahead of earnings events and things like that, despite our warnings to the contrary. And yet, this one seems even beyond the pale for what we've seen in Amazon of late. Like I said, this is more reminiscent of what we used to see in the heyday of Apple and in the early days of Facebook right after it listed. You don't typically see that many zealots in Amazon. So you're right. I would tend to lean that something else is perhaps afoot here. And I hopefully, for these guys' sake, I hope that it is the case that they are hedging shorts and indeed legging into synthetic puts, because otherwise it will be a very, very painful day tomorrow for many of them. All right, that is going to do it for the mail block. Thanks to everybody who wrote in. Keep those questions coming. Now it's time for us to keep on rolling right into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, final check-in. We've been talking about it all show. Amazon still taking it on the chin, trading right now in the after hours, 332. It closed at 358, listeners. So, again, a pretty aggressive move to the downside there, directly in at least surface opposition to a lot of the option flow we've been seeing out there. But more remains to be said of that story. This is a lot of the major names from earnings, a lot of the ones that a lot of our listeners pay attention to have reported, but there still are more on the horizon. Of course, we've got LinkedIn, and then, of course, we have Twitter coming out next week as well, and the ever-popular, ever-insane, talk about zealots, Tesla. I'd imagine this is probably going to be the next big one for the OX clientele, if it isn't already there, Alex.
It's very active here, and if I say anything negative against it, it's like saying something negative about gold.
I know. People act like you're insulting their mother when you make fun of Apple or Tesla or, sometimes Facebook. It is unbelievable.
You bite your tongue, Sebastian.
It's a stock. Back to you, Alex.
I'm frightened now.
Someday on the show we'll have to have a zealot off. The Apple zealots versus the Tesla zealots versus the gold bugs.
They are the same people.
I still maintain the gold bugs are the worst of them all, because you cannot dissuade those people ever.
Oh, you mean like your boy Gartman? Oh, the one trade Gartman thinks you should do this year: buy gold. Gee, he said that the last 10 years. Buy gold, buy gold, buy gold, buy gold, buy gold, buy gold. You know what? At some point, the blind squirrel finds a nut. And welcome to you, Mr. Gartman.
Uncle Mike, as the resident member of two of those camps, Gold Bugs and Apple, how do you defend yourself, sir?
Well, first off, I think the Apple bugs are the worst of the bunch, seeing as I am one of them myself. But in my defense, we did get out of Apple at 620 the first time around, so I am going to mention that. But you're absolutely right in terms of the zealots. It is like you're insulting someone's mother if you say something bad about one of those things. I really do believe that Apple zealots are the ones that'll try to defend it the most. In terms of the gold bugs, once again, I'm one of each, so I will fully admit that. With the gold bugs, they just kind of stay quiet and buy their gold because they're too paranoid. They don't want you to know that they have the gold, and they're too scared to tell you that they have it, so they're not going to try to defend it too much.
Yeah, that's true. The metals guys, they get into all kinds of other crazy worlds, too, of conspiracy and who's holding what physical. And I haven't been that in-depth in conspiracy theories when I was researching some recent metal stuff. It was amazing how many conspiracy theories are floating around. So at least the Apple folks, they don't have that as much as the gold folks do. I'll give them that.
It's different. I mean, the way I see it, I own a really nice gun, so if the zombies come or the government wants to get me, I'm ready, by gosh.
I knew it was going there, and I didn't want to say it, but the gold people are frequently the gun people as well. And then you go into the bomb shelters, the MREs, it just goes all the same way. It's the wife's birthday. I want to make it up the Edens tonight without being rear-ended. So I'm ending this.
All right. I think that's probably a good note to end this zealot off for this episode. If you have your own ideas for who's the worst zealot, listeners, let us know there in the mail block. Meanwhile, it's time for us to check in really quickly with each of our cohorts here on the old All-Star panel. See what's coming down the pike from each of them that may interest you until the next time the old panel can gather together. Starting off with you this time, Uncle Mike, what's coming on the pike over there at RCM?
Let's continue to check our website. We have some in-person events come in the next few weeks. I'll be updating you on those as they come a little bit closer. But with that, feel free to give me a call personally if ever you would like. I'm getting another batch of people from my last advertisement, so I probably won't be saying this much next week, but nonetheless, feel free to give me a call. I still have some openings left for the coming weeks, 312-212-3531, or send me an email at mtusa@rcmam.com. Even if you're looking to throw in a couple $100 a month and towards investing, if you want to work with an option guy, give me a call.
Are they all coming to you saying, help me buy Apple upside? Is that what it is?
Or downside, one of the two. Then I hang up.
Exactly. Then you slam the phone down in disgust. Utter disdain. All right. I'm just kidding, listeners. He'll let you buy puts in Apple, too. All right. Mr. Viceroy, what's coming down the pike over there at OX Education?
Well, Saturday, we're putting an extra camera in the driveway at home, so we'll start with that. But live event Saturday, August 9th at the Westin San Francisco Airport. Jimmy Ruzan and his crew will be doing one of their. It's about 3/4 of a day event. It's live. It's in person. If you can't make it, it's simulcast in a virtual environment on the site, so you can participate from home with your slippers and your dog on your lap. Monday night, 8 p.m., I'm doing an Idea Hub for those folks who would prefer things after hours. We haven't done a lot of Idea Hub, but with the introduction of Idea Hub for Futures, we're lighting up the hub again. We're adding 10 names into premium harvesting in the next site update here. That should be in the third quarter. Also in the third quarter, Schwab customers should see the 3- and 4-leg trade tickets initially on Schwab Mobile and Street Smart Edge. Tuesday, the July 29th, Nina's doing a platform tour. And Wednesday, July 30th, Jimmy Bittman from the SIBO actually was my bank officer when I hired him over at the Options Institute, is going to be doing a webinar on weekly flies in the SPX. All the events are free. Just come to the site, optionsexpress.com, click on the education tab.
Is there anyone in this business you haven't worked with, Alex?
Probably, but I know they're going to show up on my driveway tonight.
All right, Mr. Greasy Meatball, take us home. What's coming down the pike over there in the land of the pit?
The Option Pit Boot Camp. www.optionpit.com/bootcamp. Use code INSIDER to take 20% off.
Cool. And what does that go for? How much does that get them off? 20%?
It's $147, so
wow.
You get $30 off if you use Insider. It's a pretty good deal.
Not a bad deal. Take them up on it, listeners, and get yourself some good boot camp. It's worth it just to see Mark in his drill instructor's hat and to hear his whistle. It's fascinating stuff.
Absolutely. It is fascinating stuff.
And since Mr. Tusaw mentioned live events, I'd be remiss if I didn't remind you listeners, we are going to be having a live episode of the program September 11th, somewhere in the Chicagoland area. We're still sorting that out, but if you're going to be in or around the Chicagoland area, unfortunately, you probably won't be able to live stream it, so you got to be there in person. So mark a little note on your calendar, September 11th, live Option Block. We'll let you know more details when we have them available, time, location, that sort of thing. But we'd love to see you guys in person. We'd love to hear your questions. Even if you are a crazy gold zealot or an apple zealot, come on down, let us know. We'd love to hear your side of the story. And on behalf of the Greasy Meatball and Uncle Mike and the Viceroy, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing, installing the app, and of course for using it to send in such great questions. Keep those coming. We love to hear from you. And we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.